Hi, it's Stan Rydford, and welcome to this week's market update for August 19th. Thanks again for all the great compliments, great feedback. Thank you again for the compliments in regards to using the 10-year. I really like this too. So, this 10-year here chart in the center, we want red. We don't want green. Red is good, which means rates are coming down. So, to the left, we have the 30-year Treasury, and to the right, we have the S&P 500. So, down below here, we have the candlestick chart for the last 12 months. And what you're seeing happening here is that red candlestick. We like it to be red because that means rates are coming down. Green means rates are going up. So let's jump in the news. So obviously the saga continues with Iran. Today marks the official expiration date of the 60-day ceasefire between U.S. and Iran. There's been much escalation, strikes back and forth in the second half here. Despite those, contrary to what you're hearing, Energy Secretary Chris Wright spoke and said that they were providing an update that there is more oil flowing through that strait than what most people realize. In fact, there's upwards of 20 million barrels a day. Think about that. That is just impressive that that's even happening. A lot of them are going under the radar, shutting all their systems down and going out. And then there's also through the pipeline to the Red Sea, oil going over there too. The problem that you have is the increased insurance costs for these ships, which is still keeping oil prices up. Oil's trading somewhere around $83 a barrel right now. Fingers crossed that this thing ends pretty soon. The one good thing that did happen that's actually helping with mortgage rates today is that the Treasury announced that they will be buying longer dated Treasuries, 10-year, 20-year, and 30-year, that the market really liked and actually leveled things out a little bit because there's been lots of talks about at the next Fed meeting increasing mortgage or increasing the Fed funds rate, which again, that doesn't flow with mortgage rates. It's not the same, but it could also help there, many people believe, because that signals that inflation is maybe getting a little out of control, which the bond market loves to hear negative news like that. So, which could be good for mortgage rates. But again, it could be bad for the economy. So we'll have to wait and see. Let's talk jobs. So ADP just announced that there's approximately 9,500 jobs being created on a weekly basis for the last 4 weeks, around 41,000 jobs. That's still weak. It's been coming down slowly since the beginning of the year and everything here. So we'll have to see, but that definitely shows that there's a crack in the in the employment market. Retail sales. Amazon even spoke out that their Prime days in June and July were down, and that what they're seeing is many of the people that are buying things are using the buy now, pay later avenue there, where they haven't been seeing that as often in the past. So let's talk interest rates. So I want to show you something, and I'm going to give a shout out to Justin for actually pointing this out. But this is the Lehigh Valley, and it just shows a forecasted appreciation. So rates are a little higher. Sometimes clients say, hey, I want to wait for a lower interest rate. But here's what I can tell you, that the average appreciation here, if you're looking here over the next 5 years at the very top here, is somewhere around 4.7 to 5%. Remember that. So if you're buying today and you're paying a little bit higher interest rate, that is your appreciation a year from now, and you can utilize that to help you look at refinancing and help reduce your rate when rates go down lower. If you wait until rates come down, that appreciation could go up a little bit more because there'll be more people coming into the market, causing more competition. So just keep that in mind here. So just wanted to kind of point that out here. And again, talking about housing, again, there's a lot of opportunities out there. There are some properties that are sitting on the market a little bit longer. Remember, national news is not local news. But then you'll go to a couple of other areas where there's still a pretty hot market out there. So every area is a little bit different here between northeastern Pennsylvania and southeastern Pennsylvania. So again, there's a lot of opportunities out there. We're here to help you. Remember, we help those that are buying or refinancing, whether it's a primary residence, second home, or investment property. If you're looking at any of those, if you own a regular primary and you're looking at buying an investment or second home, you're not sure how to go about it, give me a call. Love to help walk you through that. And again, we help with refinances. We're helping a lot of people consolidate a lot of debt out there, going from a low interest rate to a higher interest rate and still showing them how to pay off their homes sooner than what they would have done on that lower rate. We help with reverse mortgages and also renovation loans. So, and we do a lot more than that. So, if there's a scenario that you're unsure of, give me a call. I would love to help. Have a great week and please forward and share.